traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 23rd day of February 2015, and this is the daily report for gold and silver. Mixed bag in the precious metals markets, with silver and palladium trading higher on the day, platinum unchanged, and gold in essence unchanged, down $1 to $2, but an interesting range and an interesting read. We'll talk about that in a second. We are back over 1201. We're trading roughly 1201, 1202, putting it off roughly $1.50 on the day. The high 12.10.20, the low, a new low on the day, 11.91.50. We'll certainly touch on that in just a second. Let's take a look at silver. As you can see from this green candle, we do have higher pricing in silver. Nonetheless, slightly higher pricing, up about a nickel on the day. It is trading over 1610. That's a support level that we have identified. And in fact, the low on the day is 1610, high 1661, well off of the highs. Really two-thirds, or a third, I should say, up the ladder in terms of range today. Currently trading, as I said, up about a nickel at 1630. More on silver in a little bit. You know, traders, getting a read on whether or not we're finding any kind of support in this market is difficult. At times, when we looked at this market trading last night, it was between up $10 to down $10 when you consider the range at 91 and 12.10. You can see that on this daily candle right here. And obviously, for those who have been with me for a while, you can identify this single candle type as a doji. And of course, the doji is significant in that what it is really stating is that during this daily battle, and the range really illustrates the battle, we've got a $20 range, neither the bears nor the bulls were able to absolutely control the market on a closing basis. They weren't able to dominate. And in fact, the unchanged tells you that you have equal play between the buyers and the sellers in the markets that are moving these markets around. Now, the fact that this particular doji comes at a 61/76% retracement is significant if we get follow through. But I will tell you this, when I saw the market break below 98 in trading overseas last night here in Hawaii, of course, to me that was significant in that we had a breakdown and that this market was most likely headed lower. I was actually quite surprised to see the kind of buying that came in the market pushing it back up. Now, we did have the equities markets, of course. They were trading under pressure a little bit lower, and the dollar was higher, so we had the dollar putting some pressure on gold today. But nonetheless, in terms of taking a look at this on a daily chart, we do absolutely have that doji. And of course, on that doji, what we look for is, will that doji really turn into a three-river morning star? Will we get some sort of pattern out of that? And that pattern would mean that following, or tomorrow's trade, I should say, we would get a long green candle with a higher high and a higher low. It would look something like this. Let me go ahead and kind of fill that in. But this is what that three-river morning star would look like. Of course, it's got to be able to find support in this area, and we haven't really seen that as of yet. If anything, the one thing that we have seen on today's trading range is an absolute breakdown below those previous lows at 98 that held for these two trading days during last week. You can see that right here, but this is dramatically below that. But the fact, even with it being below that we had a doji form, meaning that the bears couldn't dominate, because if they could, we would have seen a red candle closing near these lows of today. And that, to me, would have really triggered a sell signal in the market if we would have had a close lower than this and a break below this particular line. Because as we've looked at on many of our other studies, we can see that not only is this at a crossroads and a critical retracement level in terms of our fib retracement, but when we look at traditional trend analysis, we also get the same type of information coming through and being relevant in the market. Now, traders, that of course was looking at a daily chart. This being a very, very short-term chart, each candlestick represents 3 hours in trading. You can see how the market hit these lows down here, and these green candles are significant because they show the kind of support coming in the market and propping it back up over that 61/76% retracement, roughly in the area of 98 to 1200. We've seen that before only to see it fail. In other words, we had this, the market came down solidly, then we had it really try to come back up, came back up over this 50% line here, and then just utterly breaks down, breaks just below this 61% retracement here, tries to come up, stalls at this new level of resistance at 37, and then breaks through yet another key level of support, meaning 1220. We saw the same thing happen. It comes in, it tests the 1200 area, it comes up, but then again, it finds resistance right at this area, moves back down. And so my sense is, because of the way we've seen this market run up after having a dramatic down move and then try to recoup only to break through the next level, my sense is that all things being equal, we could see this occur again. We will have to see how it unfolds, but we're not in a clear-cut area where I can categorically tell you this market's found support and is moving back up, because it certainly hasn't. But at the same time, I cannot tell you that this market is broke down and we're seeing follow-through selling in the market, because we're certainly not seeing that as this market has come back up. But as I said from the last illustration of how this market has come up to previous levels, I wouldn't be surprised to see this market maybe even trade as high as 1220, as we've seen on these previous levels. In other words, test former support, which is now resistance. You can see resistance here, and then break back lower. So that's something that we definitely want to take a look at. Now, in terms of where I would be ultimately bullish in the market is not only to see it recover and to bounce back up, but it's not going to really be until about 1231 that we've got some concrete evidence that we have concluded this bearish sell-off. And so right now, the only thing that I can look at, and the only way that I can look at it, is the consistent pressure is to the downside. Whether or not it can find support is something that we'll have to see, and we'll have to determine how it unfolds. So traders, as far as silver goes, I've taken our weekly chart, I've really compressed it so you get an idea of where the support and resistance levels are coming from. I'm looking at this particular low right in here, which kind of matches to about 1610, and that's where that number is coming from. Once we blow this up, we can see really on a weekly basis our chart is, our candle, I should say, is just forming, but we would want to see a close above this particular point. If not, our next real level, as I said, in support in silver sits at around 1605 to 1610, 1610 being the low of the day. That's going to correspond to our current area in gold, roughly at around 1200. I think that they will run somewhat in tandem, but if we heat up in the equities markets and see that spilling over to a bearish bias in gold, we could see silver reacting much less harsh, because that industrial component of silver will kind of kick in. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.